I'm going to move on to flood insurance now, not just tax and insurance, that's RESPA. Flood insurance has its own set of rules that basically say if you are making, increasing, renewing, or extending, you have to have one of those events and it's secured by residential real estate, you must escrow if they're in a special flood hazard area for that flood insurance. Now, there are some exceptions to this. We'll get there in a minute. But that's what 1A1 is telling us. Make, increase, renew, extend any loans secured by improved real estate in a special flood hazard area. You have to escrow in for the flood insurance. And you'll notice that box, that's something you tell them when you give them that notice that says, congratulations, you got to go buy flood insurance. And oh, by the way, we're going to escrow for that as well. And so then it says that you basically follow the RESPA rules that we just went through. On page 600, it talks about that you could have to offer this as an option to your customers. That was something back in 2016 when it first came out. Let's go to 601. There are a lot of exceptions to this. Business loans, subordinate liens, short-term loans, etc. Home equity lines, open-end credit, non-performing loans. But you've got to watch, letter B at the very bottom of 601 says, if any of those expire, like they were non-performing and they catch up, or it was a subordinate lien and now the first lien gets paid off and now you're in first position, then you would have to start escrowing. And so that page 600 comes into play where you have to not offer it as an option, but now mandate it. Now, there's one big one that we haven't covered yet, and that's on page 602, and it's the small bank exemption. That probably covers a lot of you. It means you are less than $1 billion, and this is weird now, prior to July of 2012, you weren't regularly escrowing. Now, you may have started escrowing after that time, but if that's the line in the sand, that if you were not regularly escrowing other than HPMLs, then you're considered to be a non-escrowing bank. I don't know where they come up with this stuff. And then in the sense that if you started escrowing after that, that doesn't make you lose this exemption. You can say we're still a small bank and we qualify for the exemption. The only way you lose this is if you grow above $1 billion in assets, then you cannot claim, you cannot hang your hat on this, and you'll have to implement this. And so on page 603, we talk about there that if your bank status changes because of your asset size growth, then you'll have to start telling people we have to escrow for these, again, residential real estate, and you'll have to notify all existing customers that they have the option. And that's where this might come into play. Maybe you go through a merger, acquisition or something, or just regular growth, and this becomes a real pain for you. So be on the lookout for that portion of this change that could occur to you if you cross the $1 billion line, that this reg comes into play. So something to watch for, again, in addition to those non-performing or subordinate liens, is keep in memory that when you go above $1 billion or have these things that can catch you.